Hello, everyone. Greetings. Welcome to the Deadly Crypto Show, aka Cryptocurrency. Wordplay there, little wordplay there. Today, we're going to be talking about identifying market structure. Oh, fuck. I forgot to change the picture here. Well, too late. Damn, that's a bummer. Let me see if I can just throw that over. Oh, well. We're not drawing valid trend lines today, guys. That was last stream's session. I'm sorry I didn't get to change that backdrop there, but we're going to be talking about identifying market structure. So there are a lot of. Jamie, can you put me over to the corner real quick? Is that the right one? No, into the corner. All right. There we go. Okay, so there are a lot of different structures to talk about. My face is covering up the rectangle continued bearish variant continuation. But as you can see here, there's more than what's on this screen. We have symmetrical triangle bullish variant and symmetrical triangle bearish variant that we're going to be talking about today. And we're also going to be talking about the bullish flag and the bearish flag variants. So last week we talked about how to draw valid trend lines. We talked a little bit about uptrend channels, downtrend channels, consolidation. We did actually talk about how to participate in some of these events without really going too much into detail. And we're not going to cover everything today. There's going to need to be a couple different episodes in order to get that knocked out. But today, what we're going to be talking about is the symmetrical triangle, the bearish variant, and the bullish variant. And we're going to be looking at bear flags, bull flags, and bear flags because these are usually the easiest things to spot because you can pretty much just connect trend lines and see the shapes. If you're looking at something like a head and shoulders, maybe a double top or bottom, cup and handle, that can be a little bit more difficult to identify at first glance. Now, we are going to get into some of those things, but like I said, they're going to be in later episodes. So let's see who we got here today. Who is in the house? Obviously, we got our boy Jamie, Ricky Spanish. Shout out Ricky Spanish. We got a couple supporters in here. We got T-Cal and Johnny. So shout out my supporters, T-Cal and Johnny. Payaso's got a little cat in the box there. Ricky Spanish says, we're all waiting. Well, wait no longer because we are here. Johnny H says, hey, Deli, how's it going, buddy? It is going fine, Mr. Johnny. For me, life's doing all right. Life's going good. I've been getting a little bit more sun lately. Been noticing that I've stayed inside too much and behind these screens, and they're not really giving me the light that I need for my skin. So I've been trying to venture out into the sun a little bit more, spending time outside by the pool and relaxing. So life's going good, brother. Life's going good. We got Boy Tamello in here. He says, greetings. So Boy Tamello, greetings with the peace signs. Tikal says, I messed up on the head and shoulders last time. Tikal, I'm sorry you messed up on the head and shoulders, and I'm sorry we're not going to be going over that pattern today. I'm going to save that for a later segment. I mean, obviously, we got a shit ton of patterns here to cover, and in order to explain how we can partake in these circumstances, in these situations, we're going to need to be able to take it real slow. I don't want to try and cram a shitload of information into a single stream for you. It's not really my style. I want to try and express things in a way that makes sense and is easy to digest. Carpe Diem says, are you going to take a live trade? Carpe Diem, today I'm not going to take a live trade. I do have dedicated live trading sessions. This is an educational session where I'm going to be showing you about some of these formations, how to spot them in nature. We're going to do a couple little chart replays and tell you how you can act on them. And T-Cal says, it's all good, brother. That just gives you another reason to come back in the future, doesn't it, T-Cal? If I gave out all the information in one episode, for one, you probably wouldn't digest it. For two, probably wouldn't be able to implement it in your charts. And for three, I probably wouldn't see you at the next stream if I gave you all the sauce right away. So, let's get into it, guys. Again, the first ones we're going to be looking at are symmetrical triangles, bullish variant, and bearish variant. Now, I know it says here symmetrical triangle, and we are going to be looking for them to be symmetrical. If you don't know what symmetrical means, basically it means identical on both sides. So if I had, I don't know, if I had this water bottle, and, you know, this isn't vitamin water, this is some Texas natural spring water, but if I cut this bottle in half, without the label, it's going to look the same on this half as it is on the other half. That's what symmetrical means. Now, asymmetrical will be something like my face, because my mustache on one side, it looks different than it does on the other, even though they're pretty close. Okay, so the title of this triangle is a symmetrical triangle, but I want to point out that we can use asymmetrical triangles as well, and I'm going to point out a couple different examples. Boy Demelo says, is that a PDF? This is a screenshot, a document, a picture, an image. I'm going to move it up to my other tab now. This image is available pretty much all over the internet, and especially in our Discord server. I could drop it in there for you if you'd like. Server link should be in the description. So I'm going to start over here on good old Bitcoin. Now let me just go ahead and minimize this, put it up on our screen right here. So we're going to show you the triangle and then show how we're going to play it. So here I'm going to minimize that, try and get everything else out of the way so we could just see the, there we go, symmetrical triangle, bullish variant continuation. So when we look at the symmetrical triangle, bullish variant, we see that price enters from the bottom and exits towards the top, okay? So if we look at the other one here, which is a bearish variant, price has to enter from the top, okay? So I'm going to put this up here for a second. We can see that this is a bullish variant because price has entered from the bottom, okay? It's going up. Price did not enter from the top. If price had come from this direction, if there was some other stuff over here and then price came here, this would be a bearish variant and we would expect a downward break. But because this is a bullish variant, it means price has come from the bottom and entered into this market structure, this chart structure here, and the likelihood of it breaking up is higher than the likelihood of it breaking down. Now, every time you see one of these doesn't always mean it's going to play the way it entered. We could very easily see something enter here and break to the downside, okay? We're going to talk about how to be aware of that, how to look out for a possibility that it might not follow suit, but more than likely what usually occurs and why we use this to bet on the future is the likelihood of it breaking bullish after it enters bullish is greater than the likelihood of it reversing after a bullish entry. So I'm just going to go ahead and back up the replay here as we can see some of the candlesticks disappear onto the replay here, and we would not be able to see this for quite some time. So whenever we get this point here, we're not really going to be able to draw our triangle. We can project from two lines. If you were at the Drawing Valid Trend Line session last week, you'll know that you can project based off two lines. And I'll just go ahead and tighten that up a little bit because I was using a future projection. So we can have this top line and we could have this bottom line here. I'll just go ahead and remove this bottom line. That was so that I knew where we were in price action. So now if we press play on the replay here, we got it going pretty quickly. We can see price gets a rejection from here. Okay, so that's going to be, we have two touches here. This is going to be the third touch for a rejection. And then we see that price comes down. We have this little triangle here. Price is staying inside of it. So whenever we see price break above this is where we're going to want to take action. We don't want to take action anywhere before that is jumping the gun. It's getting ahead of yourself. It's acting without information. You need to make sure that the reason for entry is going to be there. So there's a couple different ways to play this. Let's just get through this animation real quick and I'll talk about the different ways we can play it. So it's not at that point where you're going to want to take the breakout and we see that it's breaking down. Remember I said we do have the possibility where sometimes we see these triangles and that looks pretty close to a symmetrical triangle right there. If we're looking at that right there and we're watching this live as it happens, because a lot of people are going to say, of course it's easy to identify market structure after it's occurred. So when you're speculating on these things, this is what you have to look out for. If you would have tried to go in here, it wasn't the right time. You possibly could have got wrecked in this situation. So now we see we're playing it forward a little bit and price is starting to form a lower low, right? This low is lower than that one. And these highs are lower than the previous. So this could be indicative of a reversal. However, we see prices coming back up here. And from our second point, right, from here to here, if we draw this line, that's a downtrend. If we draw that line, it's a downtrend. But I'm going to go ahead and delete that line because we have another line here showing us that the larger trend is still bullish. So we're getting a little bit of consolidation. If you were at the session, I think it was last week where we were drawing valid trend lines. If you were at that session, you will understand that whenever we are making projections, we have to continually connect these points and using multiple time frame analysis while the smaller structure is seemingly playing out bearish. You know, we could call this a channel. We looked at channels last week. We can call this a falling wedge because we briefly talked about that last week. We're going to go over falling wedges a little bit more in detail in a future session. But here we can see, by connecting those, we can see the smaller picture seems bearish, but the larger picture still is forming, that's a higher low than this one. If we pull up into the daily time frame, we'll be able to see that as well. I'm not going to use multiple time frame analysis so much in observing these patterns, but we will talk about how to break down in smaller time frames in order to trade them. So moving forward now, we have that connection, and we see, we'll go ahead and make this one a little dotted line because it's invalidated at this point. We're losing the asymmetrical triangle. So this is what could be referred to as a liquidity grab or a fake out, because it fakes the wrong direction first and then continues in the right direction later. So we got that next touch right here. Off of this touch would be a very, very reasonable place to enter a position long. We have two touches here, and the third touch off our projection line gives us a reason to go long. And we see it finally starting to break out. So now we're going to talk about a little about how we can trade these. I'm going to pull this off to the side just for a little bit and set up another example here, or just set this up on the side and talk about how price can react. A number of different ways price can react in here and how we can take advantage of it. So let me just open this up a little bit. I'll make that a solid line, make this a solid line. So whenever we see this type of formation here, what we're going to want to be looking at is to take longs from the bottom, right? One of the ways you can play this is to take longs from the bottom. There are different ways to play it. Like I said, whenever we see price touching here along the bottom of an asymmetrical triangle or a symmetrical triangle, we can enter long something like this. If you don't know what this tool is, it's the risk to reward ratio. We're going to go ahead and set up a long position, meaning we think price is going to break bullish. And very simply, we'll set our stop loss below the pattern. Now, if I were to move this over here and actually take this position here based off that, I would want to get my entry as close to that line as possible. And I'll put my stop loss below the formation of the pattern. If I wanted to be, a little bit more bodacious, I can try and target a recent swing low. I can use maybe the average true range, whatever you want to use to set a stop loss. Then your stop loss could become a little bit more hefty. Generally speaking, if we tried to set this here, we would not want to try and target a swing low, because look at that stop loss, and we would just be playing ourselves into a pickle. So you can set your stop loss wherever you want based off a previous low or whatever you're doing, but I generally like to keep it tight, because I know if it breaks out of that in the way that I didn't expect it to, I'm going to be in trouble. So I need to get out of that position as quickly as possible if it doesn't do what I predict it to do. So in that instance, having a tight stop loss would have saved your bippy from losing a lot more money. And then setting it up later here, you could say, okay, I'm trying this again. The first triangle failed. The second triangle could be more profitable. The first place that you're going to want to take profit to is let me come back over here now. The first place that you're going to want to take profit to is inside of the triangle. If price breaks outside of the triangle, you are already in a good position to make a bunch of money. So let's just go ahead and say price is in here. It entered bullish. So we're like, okay, there's a likelihood of price breaking bullish, right? And we're going to want to take our entry. Let's say we get in right about here. Price comes here. If you set up your risk to reward ratio along this and price hits this, this is now going to be your TP1, right? You're going to need to take some money out here, do a little take profit, readjust your stop loss, a couple of different things you're going to want to do at this point. So we're saying once we take the long from here and we make this profit, we initially suspected that price would come somewhere up to this line, but we did not know at what point that touch would occur. So now that we've seen a touch here, it's very possible that price could reject, play into the bottom of this again, and break out into a losing position. We don't want to lose money on this. It's possible that price could come here, touch here, and then finally do the breakout. In this case, we might have adjusted our stop loss and been taken out of the position, and we could have re-entered. So there's a lot of different ways this can happen. If you're trying to trade inside of the triangle, it's a little bit more risky because you don't know which way it's going to break. We never know which way it's going to break until it does. We only have clues that it could break bullish based upon what has happened in the past and, more importantly, the entry of the triangle. So what I like to do whenever I see these is I'm going to go ahead and take this risk to reward ratio off now, if I can grab that to delete it. So what I like to do whenever I see a triangle is I like to give myself an inner and outer range. Whenever I see any type of formation, I want to give myself an inner and outer range. So I'll try and clean this up as tight as I can along to the bottom of here. And let's just back it up a little bit again. Let's say that, sorry, let me grab this here. So let's say that we're just barely right here and we're seeing price come down off of that point. So as soon as my chart backs up, give it a second. All right, there we go. So my chart has now backed up. And what I like to do, again, is give myself an inner and outer range. So we see these have rejected here, popped over, popped over. Now, I drew this projection based off of these 2 points. Then we got that rejection. So somebody could put another line on here, to readjust that. Or what I like to do is clone my line so that it gets the same slope, the same gradient. And now I'm going to put it atop and adjust my high and low range. So here, I'll make this a dashed line. This is going to be an area where I'm comfortable entering for a short. In this particular scenario, this is a bullish variant that we're looking at because price entered from the bottom. So I'm not looking to take a short here. This is a take profit range. Same thing on the bottom. I'm going to clone this right here. And I'm going to drag it down below and establish where I want my range to be. Now I can use that wick. That looks like it's going to be a pretty big range, 3%. So I want to try and close up my ranges as tight as possible. So I'm just going to go ahead and drag this down. I see that a wick has came in here. We got one wick, got a wick in here. And price is now at this point right here. So whenever I see the symmetrical triangle, I'm like, okay, I need to identify an upper and lower range. I'll put the dotted lines here. So now that I know it's a bullish variant, this is actually the range where I'm comfortable entering. So I know that I can place, if I want to make sure I don't miss out on a move, I want to try and get the higher end of that range. And if I want to be a little bit more conservative and try and get the best risk to reward ratio possible, I'm going to try and drag my entry down as low as possible to that range, to the bottom of that range. And then again, we're placing our stop loss just outside of that range. And if you want to, depending upon what the market structure looks like, you can use a previous swing low. So in this instance, I'm going to put it below the swing low and outside of that line. Because we saw here in the first case with this first line, price came up just a little bit and then pushed back down. All right, so you don't want to be stopped out. I mean, we're not trying to trade short on this formation, but we don't want to be stopped out if price just makes a little poke down below and then comes back up, because that's a fake out. We don't want to get faked out. It's happened before. It's going to happen. It's going to happen to you, no doubt about it. But this is how we can try to prevent some of that, is by including a recent swing low. Now, again, if this swing low wasn't here and all we had to work off was this swing low, I'm not entirely sure that I would want to drag my stop loss that far down, because that's saying if price breaks this structure and then breaks this swing low, I'll get out of the trade. Yes, that's valid. But now I've exposed myself unnecessarily. I'm overexposed in this particular instance. And every instance is going to be different. So the primary objective when placing a stop loss along a bullish variant is that we want the stop loss to be outside of the range of the pattern. Okay, primary objective. Secondary objective for a stop loss is to look for a market structure or swing low. Now, getting back into the take profits, once we enter here, if we see these two touches here and we're like, okay, I want price to, I'm going to go ahead and come back right here, see if price will do that. Okay, so I see these 2 points. I'm like, all right, I'm going to enter somewhere in this range. I don't exactly know where it's going to touch. I can't see the future. I don't know if it's going to touch here in the next 2 candles. I don't know if price is going to come out here and touch right here and then come up. So whenever price comes back into this is where I'm going to begin to look for my entry. So I know that I want to enter somewhere in this region, but I don't know exactly where until price, develops a little bit, and then we can see, okay, it's not going to move that fast because these are 4-hour candlesticks here, but we can see price touch in there, and I'm like, okay, and that's where I'm going to get my entry. Maybe I'm going to play the middle of the range, whatever. I'll play the middle of the range just for demonstration's sake. But ideally, what you're going to want to do is get as close to the bottom line as possible. Now, sometimes you will miss a trade doing this. That's why I say I like to give myself the range to ensure I don't miss out on any potential movement. But the closer you get to the bottom of the line, the safer you are. The further you are, it's in my enter line. Yes, I'm comfortable entering there. You have to make sure you're comfortable entering there. But ultimately, my risk to reward ratio is better if I use the bottom line. Okay, moving forward now, we're going to try and place our take profit at this point. This is a take profit range right in here. We've identified this upper range where we are comfortable taking profits because we don't know if it's going to break bullish or actually get a rejection and continue downwards. So at any point, whenever price comes up into touches that range, we are comfortable taking profits. We're taking something off the table, ensuring that we make money, and potentially moving up our stop loss. So as soon as we get into a profitable move, trade management is so important. Managing a trade is so important. This is a huge percentage here, 10%. So initially our stop loss was losing. Our trade became profitable. There's no reason for us to leave that stop loss in a losing position. What we need to do is move and adjust our stop loss. And you can do this based off of a couple different things. I'm just going to go ahead and show you how we can potentially do it. So once we get into profits, we can keep moving the stop loss following the lows. So if we just watch this candle develop, we move our stop loss from here to here. After we see this low get developed, we move our stop loss from there to there. After we get into this range, maybe we move our stop loss up. Oops, let me go back and lock that. Maybe we move our stop loss up to where, if I can grab the stop loss, to where a previous high or low is, an instance right here, just for example. There's a lot of different ways you can manage your trade. You don't want to get prematurely stopped out when you're dynamic trading. It's very important to try and get as much profits as possible when the market is moving in your favor. But it's also very important to not leave that stop loss down there. You don't want something like this to happen where price comes up and then boom, you get stopped out. No reason for that. You need to take money off the table. So just moving forward here, we see this is a comfortable region for taking profits, and we're waiting for that breakout now to occur. Boom. So we have a breakout. If you were in this position when you saw your comfortable range of entry, then you're already in mad profits. This is a super duper move. There's no reason not to take profits on a 31% move. That, in my opinion, a trade like this would have been done right then and there. So again, that is how we can enter off the bottom. I'm going to delete some of this stuff and talk about the retest entry. So as we see here, price breaks out and retests into that range. So now that price has broken out, we see that this was our range of taking profits, and that's going to be the same entry range now. We can enter along this line and have our stop loss below this line. Okay? Sometimes in market structure, you're not going to be able to adjust your stop loss very pretty. But if we're trying to, let me just see if I can back it up, 1 or 2 candlesticks. Okay. I don't know why it's taking so long just to load a few candlesticks there. Maybe I have to spam it really quick. There we go. Okay, perfect. So we see this here and we're like, oh my gosh, it's breaking up. I don't want to, I got a FOMO. I don't want to miss profits. No. We're not FOMOing. We are not FOMOing. That is a huge move that's already played out. We need to be very cautious of that. What we need to do now is wait for a retest. So the retest may never come to this point. Depends upon what kind of trader you are, how comfortable you are, what your success rate has been in the past. This might be an optimal entry for you, right? Because we see price breaks this market structure, comes up. If it does a retest here, you might be comfortable entering that, saying, you know what? That was a big 30% move. I don't think price is going to come all the way back here that I'm going to be able to get into that for, a retest. I think price is going to go there, continue moving up, and if I don't get in now, I'm going to lose out on profits. So this is all going to be subject to the type of trader you are and based off of your analysis and your past experiences. But generally speaking, we want to wait for some type of retest after we see a breakout to make sure it's not a fake out. If you were at my last session, you'll know that you can jump into a smaller time frame to try and observe some of these signals of trend reversal. If I were to, I don't want to go into a smaller time frame right now because I might lose my place and then it's going to have me, do all this crap where I have to go back and look for it. But if you break into a smaller time frame, you'll be able to see 5 minutes, 15 minutes if prices are looking for a reversal based off EMAs or potentially a divergence. So here we see it looks like this is a rejection candle. Price pushed up here, moved a great distance in this green body. Price tried to move up again, but obviously there was a lot of profit taking, right? Because some people saw this pattern, entered at the bottom of the triangle, and now they're in hella profits. They don't have to continue to ride this. So there's a lot of profit taking here after a move like that, which could likely push this back down. Now, I'm not going to say that there's a lot of, is there divergence here? No, there's not even divergence. So I'm not going to say there's a lot of people entering shorts right here because psychologically that wouldn't make sense. But psychologically, it does make sense for someone to take profits after a 30% move, right? Even if you were just trading this breakout right here, waiting for it to break out, you see that, and then boom, we got a big green candle, and you get this breakout here, 13%. That's a huge fucking payday for you, man. The hedge funds across the globe average about 7 to 11% annually. In a year, in 1 year, in 1 year, the people who handle millions and billions of dollars annually can compound about 7 to 11%. We just made that in one trade. There's going to be a lot of fucking profit taking, okay? Now we look forward for this, and here we get the retest. There is where we are comfortable entering. So based off of this range that was once our take profit region, if we have not entered yet, if we were late to see this, if we didn't see the breakout, we didn't have alert set up, we don't have 3 commas bots to automate this shit for us, we need to wait for ideally for price to come back into this region. Now I talked about earlier how we can use this, which would be market structure, previous high. In that instance, and in many instances, you'll find yourself getting stopped out simply because you jumped the gun too early. Now again, if you wait too long, obviously we can miss out on a good move. But for me, comfortably, I would say that placing a position after a retest, if I missed the breakout, or if I took profits and want to retrade it, then we can say this is going to be the region where I want to enter between this line and this line that I've identified for myself. Okay, and then my stop loss now, if I want to be really tight with it, if it leaves this range, it's probably going back down to the bottom of the triangle. Maybe it's going to break down. So you can, based upon what type of person you are, how much money you're using, what your take profit target is. If you want to target all the way back to up here, you know, I would at least say you want to try and get 1-to-1 out of your risk to reward ratio. Some people might not like the idea of a 10-11% stop loss. Whatever. These are the ways that you can set up your stop loss. So, you know, putting it at the bottom of the structure, obviously if it goes outside of that structure, structure's done. It's not going to play. Being a little bit more conservative would mean your stop loss could be there. Then you can have a really awesome risk reward ratio. This one's a 6.0 risk to reward ratio. We're hoping to gain 6 times what we're willing to lose. So that would be a really, really nice risk to reward ratio. And as you can see, based off of the replay here, let me just go ahead and delete that. Price retested, entered into that range one more time, and continued to move up. You know, if I put this on forever, you can see price is making new highs, just keeps going up. So here we saw in that range, right? We saw in that range, price did not break below the point where I specified I wanted it to break below, or where I was comfortable getting stopped out. So that means I could have stayed in this position and continued to chase this up. Okay? So that is the first symmetrical triangle that we're looking at. And again, this isn't a perfect symmetrical triangle. If I drew a line straight through here like this, I mean, you'd be able to fold it over at some point, and that's not a perfect symmetrical triangle on the bottom. The slope is not as vicious as it is on the top. Here we have a greater slope than this. This is a more gradual slope. So that's not a perfect symmetrical triangle, which why I noted asymmetrical triangles. So let me get rid of this really quick and stop our replay. Okay, so see, I knew if I went into a different time frame or something, it would take me to where current price action was. I didn't want to have to dig through all this shit because that one was way back here. So that was an example of an asymmetrical triangle. I've got a couple different examples. We're also going to try and look at a bearish variant. So here in TRX, we can see this is a very similar setup here. Very, 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 very similar setup. Now, it doesn't look exactly like this one here. They almost start at the same point. Here we can see downtrend line interacts with an uptrend line. This is a consolidation. It might not be the one you're used to looking at, something like this. We're not looking at something like this, where a lot of people think that the only type of consolidation that can exist is one where price moves horizontally, failing to break above or below support or resistance. So yeah, this is a consolidation. Certainly, this is a consolidation. But let me move that out the way. Okay, grab the wrong part. So yes, certainly that was a consolidation, but this was also, oops, I'm on LTC there. This is also a consolidation too. Price is failing to break and make new highs, while it's also failing to break and make new lows. So here we see the same type of event here. Now we actually would not have this. We wouldn't have this formation up until about this point here where we get this line. So if we're looking at this and we're trying to spot this in nature, we have this bottom line here. That's a strong trend line on the bottom. And we'll try and draw here, maybe something like this. So this is a really, really steep one, as we can see by the highs here. You can trade the first breakout. Hopefully it's not a fake out. And even so, if we don't have the full formation yet, we can clone this like I like to do. You can do this any type of way you want. You can draw a new line with a different slope. You can connect different lows. This is just the way I like to do it. So I give myself a definitive range for entering. And then right here, same thing along the top. I can clone this. Say, all right, this is where I'm comfortable taking profits. If I enter from here, obviously that's a tight wedge to say that, hey, we're taking profits from here. So we just let this play out a little. It breaks out. And then we move over. Okay, so here we have a new high. We can adjust this here. All right. And let me try and back it up a little bit because this thing moves so damn fast. I don't want it to move slow as molasses because this thing can move slow as molasses. All right, so now we see, all right, we're adjusting it here and we're like, price is ranging in this area. So I'm like, okay, here, I'll put my line here or here based upon that wick. If you want to play either way is fine. Generally, I like to try and use wicks. I try not to cut through wicks if it's not necessary. And then again, I'll clone it up, make sure I get the same slant there, same slope grade, and I'll remove this one because that's an old trend line now. And now we're playing this triangle. So if we had entered off the first one, we'd already be in profits, maybe with an adjusted stop loss, and our stop loss can be in this range. However you're going to play it. If we haven't entered yet, then we're going to want to try and enter here. So let me just try and tap these real slowly. So we have a 4H candle, almost touch it, and then boom, we have this candle come in and touch in the range. So, like I was saying, if you want to try and get the best entry possible, you might miss out on some of those moves. That's why you have to identify the range that you're comfortable trading and then say, okay, I need to place my entry somewhere in this range because if I put it at the bottom, yes, that's the best place to enter. It makes your risk reward ratio look the best, right? If I put my stop loss just outside of this trend line, it's super fucking close. So it's going to be like enter. If it's a wrong entry, we're getting stopped out immediately because our analysis was wrong. Or like I said, you can pull to a recent swing low. If price breaks out of this triangle and breaks below that swing low, it's likely we're going to see downtrend continuation. So in this instance, if you waited for the best entry, you might not have got it. But that's just the way the creek crumbles. You're not going to make every trade 100% make it how you want it. You could have definitely got a really good entry in here. If you waited to go right on the trend line, probably would have missed something. But we see prices breaking out here. And we didn't really have an opportunity for a fine retest on this. We can see the price comes up, it comes back into the region a little bit before making upwards continuation. So like I was telling you, the retest may not always occur. It may not always be there. The safer place to gamble, the safest places to gamble, because trading is gambling, is going to be along the bottom of your formation. When you're looking at a bullish variant, it's going to be along the bottom of your formation or at the retest. So we see here price push out, and I don't know if I'll try and break into a smaller time frame here because I don't have anything else to show you on TRX. So we'll go into the 15-minute and see if we can find this. But no, see, I think the replay stopped. Oh, no, so the replay is there, but for whatever reason, it's not showing my lines. Let me see if they're set to one time frame only. Okay, yeah, so it's not showing on the minutes. Let me just go ahead and click the minutes now. And then I can go back into the 15 minutes and they should show up there. But it was only for the one. Okay, let me just hit all of these real quick for the 15 minutes. That way I can show you what I'm talking about. Boom, boom, boom. Visibility, minutes, visibility, Oops. Minutes. Okay. One more time, we'll go back into the 15 minutes here, and we can see what multiple time frame analysis will do for us. Damn it, that line up top still didn't show up. But whatever, I'll just clone this and draw it again. So let me just clone that, put it right up top there along our wicks, and boom. So I'll turn that to a solid line. And from here we can see, even on a 15-minute time frame, there wasn't much of an opportunity to get in on a retest. If you wanted to try and call one of these a retest, it would have had to have been this move right here. This move would have been the retest, and you see that price forms a higher low, it's likely to move up. So that would have been your opportunity. It was a much smaller opportunity than the one we just witnessed, but this is the way that you're going to want to trade the symmetrical triangle bullish variant. So we'll take a look at a couple more examples. Here we have Ethereum 1H, another symmetrical triangle, asymmetrical in this instance. Again, it's really hard to find those perfect. We do find them. We do find perfect channels sometimes. We do find perfect symmetrical triangles. They are out there, but it's not as easy to find them. So now I want to show you just one illustration of a bearish variant. So if we have a bearish variant here, this is going to be on LTC on the 1-day time frame. Hopefully these are set up to be visible in the minutes. Okay. So I can see that this is a bearish symmetrical triangle, and it could also be a bearish pennant, bearish flag. Generally, we will call this a pennant over a flag, but here we can obviously see price entered from the top. If I'm pulling this back in now and we look at the bearish variant, we can see price is entered from the top. Price did not enter from the bottom. So we would not expect this to break bullish. We would expect it to break bearish, right? So whenever we expect it to break bearish, we're going to do the exact same thing. We're going to go, let me back up the replay here. We have 2 touches. Let's just go ahead to where we have 2 touches on this first one. We're not going to be able to see this yet. We have 2 touches here. This is our downtrend projection. We're looking at shorting from this point because we have a likelihood that price is going to continue in a downwards manner. So we can go ahead and clone this at whatever stage we want to and say this is my area for comfortable entries. Set that up just like so. Here we already have 1 wick rising, so naturally I'm going to try and connect my lines as often as possible. If this breaks to the downside, then we know we are wrong on that, so we get a rejection here, and this is the rejection point. We're like, okay, this is a really good place to short. Remember, when we were looking at the bullish variant, we want a long from the bottom. When we're looking at a bearish variant, we want to short from the top. So even if we're connecting our trend lines here, we see that this could be a really ugly triangle, and it's about to break that triangle. So we want to try and place our shorts, same way we were doing our longs, with our entry right here. Stop loss above that trend line or above a candlestick high. This would be another high that we could use. In this instance, that's a 13% stop loss. You know, depending upon what kind of trader you are, you're a day swing trader, how much money you're putting into each position. If you're going 100x, you definitely don't want a 13% stop loss. If you're going 5-10x, maybe you don't want a 13% stop loss. So you try and drag that down to that wick that just poked out, or again, the formation of the triangle. And just playing this forward a little bit, we see we're going to be chasing down. So now we have a new low. This has become invalidated. This one has become invalidated. We'll just draw that little line like that. We're no longer using that triangle or that trend. We have a new triangle. So if we did not get the opportunity to enter here, if we were skeptical, we weren't too sure that that was a triangle, now we can be a little bit more positive. This is a triangle. We are in our entry range with those 2 candles. So we'll go ahead and set this up for a clone. This is going to be our take profit region down here. Right down here is our take profit region. And on the 1 day, that doesn't look, too ideal. It doesn't look like you could squeeze a bunch out of that. But if we go here into the 1H and we're trading from this to this, anywhere in this range, as soon as it leaves this range to that one, that's 4%. Fucking fantastic. That's 0.5% is fucking fantastic. But anyway, here we can see 4% at TP1. We can set this up for TP2. If price fails to break below this here, we take our profits, right? But if it breaks below all the way, we're in the money shot. We already got the best entry for when it does break. So then we'll just go ahead and play this a little bit, see how price actually comes. Here we're going to be a little bit cautious. Obviously, price comes back up again. We took some profits there. It breaks out above. So this is what we have now. I'm glad we're here on the smaller time frame because we were expecting this to break down. And if I come back into the larger time frame, we'll see that looks like a retest. I'll play it out so you can see how it goes. And that was the fake out. That was the fake out. A lot of people get stopped out amongst those fake outs. So let me go ahead and, go ahead and back up a little bit more. We see that price is breaking to the top side. So we have to be cautious of those movements as it could be a real breakout and it could be a fake out. And my chart's taking forever to load. Did not go where I wanted it to, so let's go back into that. As soon as this bad boy will load. Okay, going back into a smaller time frame now. This is where we're at. We see prices forming new highs, new lows. Okay, it backed up again. Prices forming new highs and new lows. So here we see it breaking out. Looks like a retest on the breakout. Sure, a lot of people got in for that on this intraday trade. And we see prices coming up. We have a new structure that we can play here. This looks like a rising wedge. So playing multiple time frames means you have to play a structure within a structure. If you know what structures you're looking for, if I make this a little bit larger, then we can see rising wedge has a likelihood of breaking down. So anyone with eyeballs looking at that is going to say, hey, you know what? I'm going to wait for that to play out and see if it obeys the rising wedge, because more than likely it's going to fall down. And here's where you can use other context clues, like I'm just going to go ahead and put on our EMA cross here. I think I have the 100 off for using my other script. But here we can see it looks like we're having a crossover, 5200 cross on the 1 inch time frame. Great. So we're going to need to look for that retest if this is truly an uptrend reversal. But what has happened here? Price is broken below. Price broke out of the rising wedge. Price is now creating lower highs. So if you were at my session last week, drawing valid trend lines, if you haven't seen it, go watch it. You'll see intrastructures. Okay, it's coming back down towards that break. This could potentially be a fake out. So now once we get back into our range of comfortable entry, which is right here for a retest or going on the long side, remember we identified that range as our safety range. When we watch it play out a little bit more, we're like, okay, now we're back at the bottom of these lines that we had presented, and price looks like it's breaking to the downside. So this range is going to be played until it's not anymore. We had that fake out. Here on a smaller time frame, we can see the movements, the heartbeat, if you would call it, the pulse of this asset. The smaller you get into time frames, the more structures you're going to see, the different obstacles you're going to be able to play. Looking at it from the daily time frame, you really wouldn't be able to assess that properly because you don't have reversal signals. The best you would have got here was betting that you could reject off of the 26 EMA. I mean, depending upon what EMA you're using, maybe you're using a 20 EMA, whatever. But just based off the market structure here, you see it looks like a little fucked up little chicken scratch game here. But in the end, there was a fake out and price broke to the downside off of a bearish flag. That's why I wanted to show you this one so you can know what a fake out looks like. Oftentimes traders get stopped in the fake out. Like if we were trading this on the 1H and we had our range here and set up trading like a good noodle like we should be, we're entering our shorts, we have our stop loss just above this and our TP here, we get stopped out of this trade. We're still going to be observant of this because we know it could be a fake out and that we could potentially get a redemption shot. Now, I'm not trying to tell you to chase the money or emotionally trade or revenge trade, but we know just factually, if it fails to get up over these highs and using other context clues, price could go back into that range. And since we identified this on the daily time frame, there could be a really large movement to the downside. Even from breaking down here, that's 25%. You can short that, make profits, huge payday. So because we identified this on a larger time frame, which is how you should be doing your analysis, using a top-down approach, multiple time frame analysis. If you don't know what multiple time frame analysis is, I have a tutorial video on multiple time frame analysis as well. I think I see some comments up there. We're about to get to the comments. And any questions you might have about symmetrical triangles before we move into bullish and bearish flags. So I think I've done enough gum bumping for today, or for these patterns. Let me just go ahead and exit the replay. And boom, we see price did end up going to that swing low, even lower than that, before making a reversal into an uptrend. So those are our symmetrical triangles, bearish and bullish variance. Remember the keys to these flags. If price enters from the downside, we're looking at a bullish break. If price enters from the upside, we're looking at a bearish break. Okay? Those are the key takeaways. There's a lot of different places you can enter and exit, a lot of different ways to be safe. Those are the ways that you're going to want to be safe on that. If we have any questions now, I'm going to take a sip of water, of some glorious natural Texas spring water. I don't want to drink too much because I already feel like I have to pee, but my mouth is fucking dry. So I'm going to take a drink of water. All right, let's see what kind of questions we got. Not that much, not that much. Boytamelo says, please do so. Boytamelo, are you in the Crypto University server or the Spot server? Because I can drop that into whichever one you are in. You know what? Matter of fact, I'm just going to make you join the Spot. So I'll drop this. Let me see. Open up my downloads here. So chart patterns, going to the Discord. Just really quick to drop that into the Discord, into the Spot. So here is the Spot. We'll pull open the Spot right here so you can see. I'm going to go ahead to Deadly Traders, General Chat. Was talking about some giveaways there recently. So chart patterns coming into General Chat. Boom. If you want this spreadsheet, this cheat sheet right here, it is in the Spot server. Just join the server. Go download that. The server link should be in the description of this video. God, I hope it is. Jamie, if not, could you please send the invite link to the Discord server? You know what? Matter of fact, let me just go ahead and do it while I'm here. Free server, guys. You don't have to pay anything to join the server. If you're a supporter, you get a cool role and some private shit, but supporter is like $2.99 a month. Anyway, here is our invite. So we'll paste that into the comments there. If it's not in the description, it's definitely in the comments. You can join and go get that cheat sheet right there. All right, so let me look at the rest of our comments. Ananya says, made it on time. What's up, Ananya? Carpe Diem Crypto says, can I share this to the trading group? Of course, brother, if you'd like to. I don't like to share my streams in the Crypto University server because I don't believe in shilling shit. That's the Crypto University space. If you want to share something you're interested in, if it was another YouTube channel, I'd be all right with that. So Abdul says, hello, sir. What's up, bro? I got you. I got approved your follow request on Instagram, Mr. Abdul Samad. Johnny A says, I totally suck at trade management. Johnny, it's definitely something we have to work on, bro. I mean, everyone sucks at it until they don't. Even when you don't suck at it, you still suck at it. It's really hard to manage a trade because you don't know if it's going to be profitable or not. The most important thing whenever you're trying to manage a trade is once you get into profits, I would say, now this is going to be different for everyone because a lot of traders say, oh, you're leaving profits on the table. And, you know, it can be painful to get stopped out of a position, watch it go in your favor in the direction you anticipate it to go. But it is much more painful to watch money leave your account. When you run into a losing stop loss, that is painful. There's no reason for, if price fluctuates 0.5% into a profitable region, that you don't adjust the stop loss because you want to walk away with some money. 50-cent gain is better than a 50-cent loss, right? It doesn't matter what the gain is. If it's 5 pennies, it's better than a 5-penny loss. We want to compound wins. So over time, you know, looking at it, if it goes in the direction you thought, like I said, is painful. Of course, I agree. Almost feels like you lost money, but you didn't. You made money. So managing the trade, the most important thing is once you get into profits, move that stop loss into a profitable position to where if it reverses, at least cover the trading fees on your exchange. Put it to where you could at least cover the trading fees, maybe make a few pennies. Because compounding wins is better than compounding losses. Elvis says, hello, sir. What's up, Elvis? So, guys, I got a couple more comments I'm going to go through, and then we'll go into the bullish and bearish flags. T-Cal says, what happened to the vitamin water? Okay, so T-Cal, I go to the grocery store on Sundays. We're creatures of habits. I usually go to the grocery store on Sundays, and I buy a shitload of vitamin water. Throughout the week, I go to the gym in the mornings. 5 days a week, I'm going to the gym. On Thursdays, I go to the track. So when I get back from the gym, I have vitamin water. I go to jiu-jitsu 5 days a week in the afternoon. except on Thursdays, class is 11:30 to 12:30, so my noon time after jujitsu class, I'm fucking parched. I gotta drink water, and I drink the vitamin water. So by the end of the week, the streams are on Fridays. By the end of the week, usually all I have left is regular water because I drink the shit out of the vitamin water. I finished. I had a lemonade here, a lemon flavored vitamin water, and there was like this much in it before I started the stream. I was like, I'm gonna save this until the stream starts to drink it. And then I was like, nah, I'm fucking thirsty. I'm gonna drink it right now. So nothing wrong with vitamin water. I love vitamin water. I hope they see this. I hope they'll give me a sponsor. But yeah, I drink the shit out of it. It didn't make it to the stream because I drank it. Tikal says, fantastic explanation, brother. Boy Tamila says, there's nothing I hate like a fake out. You're right, bro. The fake outs are trouble. I mean, there's money in fake outs as well. Definitely. Got to pay attention to it, though. You just got to be careful about what you're doing. And consolidating, that's when I lose most of my trades. Don't try and trade a consolidation. More so than not, you're not going to be able to predict whichever way a consolidation breaks until it actually does. We have clues for bullish and bearish variance, but you never know when the break occurs until it does. You can trade inside the consolidation. What I would suggest to familiarize yourself with that is just set up the risk to reward ratios. Just set these up inside of your consolidation ranges and see what would have happened. That way you know what your speculations are versus what actually occurs in the market. So just for example, again, I'll bring in CRO. If we're looking at this, we see, it entered from the top. Let me pull up our little cheat sheet again. If we're looking at this and we look at consolidation, which is going to be a rectangle on here. If it enters from the top, same shit. We're expecting it to break to the bottom. If it enters from the bottom, we're expecting it to break to the top. So, coming back over here, we saw it enter from the top. This is a consolidation. We're expecting it to break to the bottom. Plain and simple. So you want to be cautious of those. Set up a risk to reward ratio in that. You don't have to put money on it. You can use a paper trading account, whatever. Before you actually come in here with a shitload of money, you need to know your strategies. You need to know what type of trader you are and how to manage your emotions while you're there. So having a strategy, managing your risk, right? That's why it helps to do a paper trading. If you're just using the risk to reward ratio, you're not really going to get a good grasp on how to manage funds, which is why most people recommend paper trading or demo accounts. So, and then the last thing is emotional management. You have to know who you are as a person, how your emotions get in the way. So these three things were very important before you actually start trading with real money. Don't fucking practice this shit with real money. Yeah, if it works, great, you're making money. Majority of the time when you're practicing, it's not going to work and you're going to be losing money. I don't understand why so many people think they can watch a video or two and go to the crypto market with their life savings and think they're going to do it. I know people who are like, I'm trying to recover my losses, and they just start trading more aggressively. Like, why did you lose money in the first place? Because you don't know what you're doing. I'm not trying to be rude, but you don't know what you're doing. Why are you bringing a lot of money to this? It's like you don't watch a poker video and then go to the casino with your. You know what? A lot of people do. A lot of people go to the casino and not knowing how to fucking play cards, play poker, play blackjack, whatever, go and lose all their money. It's not intelligent. It's not the intelligent thing to do. Practice makes perfect. Practice makes perfect. And you're never going to perfect trading, but you'll definitely understand your strategies, your risk management, and your emotions. So that's what I can do. TCal, last comment before we go into the bear and bull flags demonstration, because TCal is one of our supporters. Shout out TCal. He says, sometimes you don't know you're in a consolidation until you're halfway through it with a losing trade. That's painful. So TCal, on that note, why are you in a losing trade? You have to have a reason for entry. Look, we're looking at this chart right now on Litecoin, Bybit. 3 days from now, price is going to be either higher than it is right now or lower than it is right now. So yes, I can place a trade speculating that, hey, price is going to be higher or price is going to be lower. But if I don't have a reason for entry, if I don't have a valid reason to believe price is going to move a certain direction, I have no business in that trade. So don't just be jumping into trades because someone told you to, because someone dropped a signal, because it's crossing something. Make sure you have a reason for entry, and that'll help you a lot. All right, so now, guys, if there are no other questions on that, we'll go ahead and move into some flags. We're going to talk about bull and bear flags, and we're talking about these today because they are the easiest patterns to spot. If you weren't here at the beginning, there's a lot of different patterns, even outside of this cheat sheet that we can use. different candlestick combinations that we're not going to talk about today. But the easiest things to spot generally are triangles, because everybody has eyes, knows what a triangle looks like. And, here's same thing into the bullish and bearish flags. If I zoom in on these, this is very easy. Last week we talked about channels. So if you find an ascending channel, or, it could even turn into a pendant. Obviously, those some of these that we were looking at here, if you take this, copy and paste it, drag it over here, the symmetrical triangle turns into a bullish pennant or a bearish pennant, right? So if we come back and look at the Litecoin position, that could be a bearish pennant, right? We're looking at this here. This is a bearish symmetrical variant, but it's also the pennant of a flag. Okay, so that being said, we're going to now look at the flags, bull flag and bear flag. So I'm going to talk about this formation really quick. So it's similar to that pennant I just showed you. For a bullish continuation, we're seeing price come up, create a downtrend channel or downtrend formation. Doesn't exactly have to be perfect, and I'll show you what I mean in just a second. And for the bearish variant, we want to see it come from the top, form an uptrend channel variation, and then we're expecting it to break to the bottom. So I'll move this out of the way now. I don't think I had any bear flags for us in Litecoin, so I'll go ahead and close that, get it out of my way. We'll just close that. I don't think I had any flags in TRX to show, so I'll go ahead and close that. Let me exit the replay at least there. Yes. Okay, we're going to close that tab. Close. Okay. So now we're back in good old Bitcoin. Everybody knows Bitcoin. Hopefully you have some. Hopefully you're accumulating. Don't wait for Bitcoin to be $50,000 again to start buying, bro. You want to start buying now. But anyway, we're going to go ahead and move forward here to where these bear flags are. So we got a huge bear flag, huge bear flag, huge bear flag. And I actually want to show you how to project, because here, this is going to be very, very, very technical. So pay attention. Don't look at that text message from your girlfriend, your side hoe. Tell your mom and you'll call her back. Pay attention so you can understand how to make these projections. Okay? Pay close attention to how to make these projections. So I'm going to go ahead and back up here. All right. We don't have any of this price information. Let me just go ahead and close those out real quick. Actually, I'll just close all this and it'll come to my great bear flag. Because this motherfucker paid me. This motherfucker paid me. Okay. I told people that you can find this picture on my Twitter. I told people here, the potential for Bitcoin to go to 17,784 was very high. And this is why. This is very technical. You can get very technical on these flags with your projections. Now, it doesn't always come to life. It doesn't always meet the percentage time frame. It doesn't always meet the distance time frame that you give it. But you can make very, very technical speculations based off of bear flags. Here we have a big, fat bear flag. So we're going to measure from the high point to the low point of the flag, right? And we don't know this flag is here for a while. We actually wouldn't know this flag was here until about this point. We don't know this is a flag until about somewhere around this point, where we have these two highs for a projection and these two lows. So we see that price is attempting to, let me just put on some active structure, larger picture. We see that price is going to be coming up against this downtrend. Here I think is actually where it meets some of that resistance, but it's forming an uptrend channel. It's forming an uptrend channel. So we could see now, based off of these projections, if this does turn out to be a bear flag, based upon where it breaks, we don't know where it's going to break. We don't know where it's going to break. When the break occurs, we can use that projection. So we'll go ahead and say from here, from high to the low point of the entry, right? From, let me get my flag up here. We're going to measure from 1 to 2. This is point 1, this is point 2. This is the high point, the highest point, right? We can't use this. We can't use this. This is the highest point from point 1 to 2. So we measured that. We measured that distance and we measured that percent, right? Boom. So we have right there 52.41% over 450 bars. So we know that it took 450 candlesticks on this time frame to reach the valley of that move, to reach from 1 to 2. Okay. We also know that the distance was 450 and the percentage was 52%. So our X value is going to be time. Our Y value is going to be percent. Right? Are you guys with me so far? Okay, we've made a projection based off of the X value, which is going to be time. The distance is our Y value. That is percent. Okay? Now, moving this out of the way, we do our little play, we do our little dealio. Now, to trade, I'll talk about how to trade it in a second with the different ways we can trade this, because this was a fucking huge daily bear flag. That was huge. There was lots of trading opportunities inside this. But the biggest opportunity is when price actually breaks out of that. So, let me see if I can, oh, that's the fastest it's going to go. So, anyway, let me see. I don't want to try and skip to real time forward. Okay, so we're just going to let it play out now. There's a lot of price action going on in here. And like I said, there's multiple structures in here. You know, we even see like that little triangle. We can see that triangle right there, blah, blah, blah. So we're playing this. We're trading different structures until we see the actual break occur. So now, once we see the break occur, we're almost there, promise. Once we see the break occur, we can set this projection up at any different point, but until it actually breaks, boom. Okay, we could have moved this. I could have placed this present. I can draw from any place. Like, hey, you know, I could expect it to break here for 52%, 405 days. Whenever the break occurs, that's where we set it up. Now that we have the break, we use our X and Y projections where X gave us time and Y gave us percent. So we know possibly a deep deviation on this could be 52%. That puts us at 17,784. The time that this could fill is 450 days. That means this move could be played out by July 18th, 2022. Now, I'm not gonna wait for this replay to play out again. I'm just gonna go ahead and stop it so we can see exactly what happened here. What the fuck? Oh my god, it is like technical analysis works or something. What? Price came down right here and we see the low of this 17,600 based off of 17,784 projection. I'm not making this up. I'm not pulling this out of my ass. I showed this picture on Twitter. Go look at my Twitter. I showed this. I asked for your thoughts. That was crazy. That was so crazy. This is how you can really take advantage of these moves. Okay? So now that we see that clear as day, X and Y, we have our projections, it's set up. So we saw it fill there. Now, at this point, we could have been a little bit cautious, saying that, hey, there's still some time left on this range. It could poke down lower. But we already met the percentage. Take some profits. Already met some percentage. Take some profits. Move your stop loss. Take some profits. Whenever price leaves this region, whenever it leaves the Y and X values that we projected, we know that the likelihood of going any further is over, right? It still could go down, but according to this bear flag structure, that projection has been filled. We're done with that. So I'm going to go ahead and close our great bear flag here. Let me get rid of those two lines real quick, that little infrastructure we drew. And then I will show these other bear flags that I have. Where they at? Okay, so there's the big old bear flag. And, you know, we're going to do the same shit from where it broke here. So we're going to use 1 to 2, 1 to 2, right? 1 to 2. So we use our measurements based off the break of that bear flag, yada, 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 30% over 8 days. And that's not perfect. If I'm making these projections, like, really for me to place money on them, I'm going to be way precise. I'm going to zoom in, find exactly where that break is, find exactly how long it took to the high, for the break to the low. But just for the purpose of this now, we've already seen one with very clean touches. So now we have another bear flag here, and this isn't parallel. Like here we can see this is parallel, almost a parallel channel, almost fucking perfect parallel channel. Right here, sloping into each other a little bit. This is still a bear flag. And we now see from our, we have 3 to 4, where it actually breaks. So we're going to measure that now. We're going to say, all right, from 3 to 4, we're looking at, from the break here, we see it coming down. Okay, so from here's the break. We're going to go, all right, 30%. How many candles was that? I already forgot. We're going to say, whatever, 28% over 37 candles. So we're making that projection, 28% over 38 candles. I think that's what I said. So boom, that would have been our projection. I think if I move this, it's going to go away. Yeah, but whatever. I'll zoom in a little bit. So here's our projection. 28% over, I think I said 32 candles. I don't know. I processed a lot of information and pushed a lot of shit out. So that projection was met. That projection was met. X and Y values were filled. Both of them, right? X and Y values. We had our percent distance covered, and we had the time distance covered. So remember, I said it could go lower. In this instance, it did. But you had a very, very clear area to take profits. There was a very, very obvious point of profit taking. Now, if you wanted to stay in that, whatever, new information is presented. As the market develops, we might have new information. But based off of that bear flag break, we had a fine range. And now we're moving over to where we are now. And we're going to go ahead and do this again. This is another bear flag. This is one that I traded for a while, as you can see from those dotted lines. We're doing the same thing. Here, we don't get the full fill. And I think it's because a lot of people had already caught on to this. Is the third bear flag in a row on larger time frames. So now we measure 40%, 53 bars. And I did project this, and I was waiting for this here. But here, what is important to note, 53 bars, 40%. So I'm going to go 40%, 53 bars. Okay, so that's about where we were expecting. Now, this distance did not get filled. This distance right here did not get filled. The percentage distance did not get filled. The time distance expired, right? Price did not reach that full deviation within the time we expected it to. Indication to take profits. If you wanted to try and hold on to it, maybe it still could come down to 13K. I don't know. I can't predict the future. But as far as our time value goes, it has expired. So now we know, hey, we need to start taking profits on this. We need to be wary. We need to adjust our stop loss, whatever. Because price ultimately did come back to the entry here. Got a lot of people stopped out because everyone thought it was going to be a three-peat. Same thing 3 times in a row. But at that point, it was too obvious. Okay? So that is how you will play. And the same thing for a bull flag. Where did I have those bull flags at? I think I had some on ETH to show us. Yeah. So this is on the 1H time frame now. And again, we're doing the same thing. Let me just come and get our bull flag continuation here. Right. So price enters from the bottom. We're expecting it to exit at the top in a bullish manner. Price enters from the bottom. We're expecting it to exit towards the top in a bullish manner. We do the same thing. We take from 1 to 2. There's no flag. Sometimes you see these flags repeatedly, and from that point, I'll use the breakout. But before we have that, I'm going to use this point. I'm not going to use that one or that one because this is the low before the entry. So we have up to the high, 14% over 17 hours. So from the break, we're going to look at 14% over 17 hours. Okay, so this would have been our projection. Lo and behold, price does not come up 14% here. By the time it reaches the expiry of our projection, we are in profits. So not every time is it going to play out perfectly. That great bear flag on Bitcoin that was an amazing trade. That was an amazing opportunity, and it filled the projection completely. But if you run into your percent fill, if this would have shot up 14% before reaching the distance, so if it came up, if I click anything, that's going to go away, so I'm just going to leave it there. If it came up here, hit 14% before it fell out of the distance time frame we expected it, it's likely to expire. Let's take profits. It's there. If it reaches the end of the distance time projection before the percent fills, it's likely, take profits. We're already there. Here we can see ultimately it did come up that high. Based off of that, it fell, it traded outside of that time range. But then again, we'll just go ahead and use this one. So we see here from entry to peak, 7% over 4 hours. From the break, we see a little bit of a fake out, but 7% over 4, what was it, 4 hours, I think we said? 7% over 4 hours. Yeah. So 7% over 4 hours. So that means from the break, we're going to be looking here at 4 hours from the break, 7%. We don't fill 7% here, but we can see after 4 hours, this is also still a profitable position. 4 hours has passed from that observation. Well, time to take profits. Like I said, in this instance, it actually did go up, but our distance and time did not go according to plan. When one or the other reaches, if your percent fills, take profits. If it exits the distance of your projection, the time that you gave it on your projection, take profits. Okay? So it is very, very, very easy to trade bull flags and bear flags, and very, very, very technical. These are very technical patterns. Like when we're trading the symmetrical triangles, we have to use, if I go back over here, we have to use a swing high, or, if we want to trade the breakout of this, we could probably use these levels, which is what I would normally do. I'll set these up as take profits here, blah, 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 because, this is where these are highs. Price can come above here and break this. But we're kind of floating in the dark here. We can't even use this as a time projection because price could fake out and come to the bottom. So it's not as easy to trade. It might seem easier to trade a symmetrical triangle because it's easy on the eye, but you can get so much further with bull and bear flags just because they are very, very technical patterns that real traders who know how to do technical analysis will make those projections. It was very obvious with this big old bear flag here. There were so many eyes on targeting that to 17.5, and it filled, and then everyone started taking profits, and here we are. So, quick rundown on the bull and bear flags, X and Y projections. Now we're going to talk about how to trade inside of them. Obviously, these Ethereum plays right here, if I just back up, how far away are we? Can I back up into that? Let me do the replay here because according to the replay, I can stay somewhere within that range. So let me go into a smaller time frame here. If we're trying to trade these formations, you can, right? Oh my goodness. Okay, so we don't have historical data for that resolution on that time frame. Data points unavailable. All right, so whatever. I'm going to come back to the Bitcoin one just to show us here. So let me just drop into this was spotted on the daily time frame, but even here, if you see, I jump into the 4-hour time frame. We have different patterns. We have a bunch of different stuff going on here, so we can trade all kinds of different patterns. There's a rising wedge. There's descending channels. We go into the 15-minute time frame. It gets even smaller. So if it's a larger picture like this, there's infrastructure to trade. But generally speaking, when we see a bear flag, what we're gonna want to do is clone this. Same thing as before. Nothing different, nothing new. We're setting up this line right here. We're gonna clone this line right here, and we're gonna, this is our entry, safe entries for long, safe entry for short. When we see a bear flag, we're expecting it to break down. So our best entries are going to be along the short. Sure, you can trade the bottom of this channel. Obviously, you can trade. If I come over here, this one was a little bit better. If I clone this, give myself a range of entry, and clone this, give myself a range of entry. What I want to do here is find places to enter short from the top and find places to long from the bottom. In this instance, longing from the bottom because it's a bear flag. It's possible to counter trend trade, but I highly advise against that until you have more confidence in your trades. So while we're witnessing the bear flag, we can trade inside the bear flag, whatever other intra patterns there are, like this right here. Here's an intra pattern. We have a little downtrend. We shorted from here. Price breaks above this line. We get out of the short. It touched right here. Obviously, that's a take profit condition. So take the profits on your short. If it broke right here, we already had the best entry for that breakdown. Now, let's just say we didn't short from the top, right? We noticed this right here and price didn't come back into our safe entry range, so we didn't take the short. That's all good and dandy. Well, look what we have here, the break. The break is a spot where you'll want to trade, okay? So if you've missed the optimal entry, you still have the opportunity on the retest. And it's going to be the same thing as if we were talking about earlier on the triangles. Now, instead of setting up something like this, where our entry is in this range, stop loss is above the pattern formation, and take profits here, we're going to put our safe entry here on the retest, somewhere outside of this, and our stop loss is going to be in here, because if price re-enters this, it was a fake out. We saw that in Litecoin, fake out. If price re-enters that, it's fake out, maybe we can go long. But in this instance, it would have worked. Here, we would have had the projections. We see it break out, so now we can put those projections, remember measuring X and Y, and also too, we can use recent chart structure or recent market structure, swing highs and swing lows for different take profits areas. There could have been one example of a trade based off of recent price action, but if you knew how to trade the bear flag with your X and Y projections, you know that there was still a little bit more money on the table, and that is where you didn't adjust your stop loss too tight, as to where you didn't leave money on the table. So I love trading bear flags and bull flags. Easy money. Easy money. And remember too, you can get into this on a smaller time frame. You would have been able to see a couple of different things. We're on the 4H. If you get in there, you'll be able to see retest. You can use your EMAs, your RSI, MACD, whatever the hell you like to trade with. The observation is made on the chart based off the candlesticks. Then we can get in and use our other tools to help us identify what we want to do about that, okay? So just because, today's presentation was mainly centered around chart structure and identifying chart patterns, but once you get that break, if you're waiting for that retest, you didn't get the best entry up here based off the chart pattern, then you can use other things like your RSI, MACD, ADX to determine, hey, like for right here, I would have been able to say, you know what, my ADX is picking up in a downtrend. Where's the damn replay? ADX is picking up in a downtrend, see right here? See this line starting to slope up. I can enter that with a different range on stop losses going to the end of my projections. Oops. It's the replay. So yeah, that's where we're at. So now you know how to measure and project very, very precisely where we think price could go. So we'll open it up to any questions. If you have them, we'll try and get them answered. And after this comment set, or after we go through these comments here, we're gonna go ahead and call it a day, because I have to pee. I gotta go take a pee, but that's okay. Let's see what kind of comments you got. I'm gonna take a small drink of water so my bladder doesn't rupture. Okay. Let's see what kind of comments we got, fellas. Not too many new comments. Ricky Spanish says he's seen people lose thousands at the casinos as a dealer. It really is crazy. Yeah, they don't know what they're doing. They just go in there and fuck shit up. Payaso is laughing, says, okay. Not really sure where that comment was from or the laughing face. I think he's talking to Ricky Spanish there. Johnny 8 says, using time and distances for taking profits is something I never knew about. Do you use Fibonacci levels with this? And Johnny, you can use Fibonacci levels with this. I personally am not a Fibonacci trader. I know someone who has a lot of success. If you guys know G-Man, don't know if he's here or not right now in the crowd watching. G-Man has a lot of success with Fibonacci's. He probably could have applied a fib on the daily 4H time frame or something like that to help him identify areas of profit taking or stop loss adjustment. And you can combine any type of analysis you want to with this. But the main thing you want to get out of this is to give yourself percentage and time projections. So yes, you can definitely use fibs, but I personally do not. Now I do have somewhere. I have a big old fucking fib somewhere. I think it's on a different chart. Generally, if I'm using a fib, it's going to be on a larger time frame. I could probably show you real quick if I do have one. 2021 bull cycle. So yeah, here's my fib projection for 2020. For the bull run that was ahead, I used a swing low from COVID crash and previous high 19666 from Bitstamp. To give myself these fibs. So, I could have used maybe that level as a stop loss adjustment. Here it actually did come pretty close. We saw ultimately it was below that fib level, but you could have used that fib level. I personally don't like to trade. You can draw them as many times as you want, every single time with the trend as it changes. But the way I use fibs is on a larger time frame to give myself an idea of what might be happening on the bigger picture. So to answer your question, yes, you can, but I did not in that instance. Diamond Thief says, can you send us the chart in the group? Diamond Thief, if you're asking about the Crypto University group, I sure can. I'll do it after this session. I'll drop it into, you know what? I think I can just pop in there right now. So, yeah, it's going to seem out of place because I'm just throwing it in there right now, but it's going to be in the general chat. So we'll just go ahead and throw that into the general chat there. And let me get you in there. Oops. Okay, so now it's in my server. You should join my server if you're not. But yeah, it's in the Crypto University server now. Yes! Damn, bro, you always show up at the end of the stream. Everybody want to give a shout out to Niaz. He's a longtime supporter. He says, "Hi, sir. Sorry, brother. I'm not leaving on you right away. Right now, we're doing questions and answers. Welcome, Niaz. I appreciate you being here. Damn, bro. Sorry it was so late. You know what? I got another stream scheduled for 12 o'clock already, but a future stream, I'll schedule it an hour later, Niaz, so that way you can get a little more on time." Johnny says, "Great. Cheers, buddy." Boytamelo says, "Do not have much to say, but real information." You're damn right, bro. This is some real information. I'm giving the sauce away for free. If you guys are here watching this and you're not subscribed, please subscribe, like the video. That helps a lot, more than you'll ever know. I really appreciate it whenever you like the video. Tell your buds too. Yo, Deadly Crypto, he's out here telling people how to trade for free. You got to get in on this shit, man. I'd appreciate it. Diamond Thief says, "Thank you." Okay, fellas. Well, if there's no questions about our bear flags or bull flags, I didn't really have any good examples for bull flags picked out because they're not always perfect, but that is the way you want to give yourself projections, no matter what time frame you're on, no matter what asset you're looking at. That's how you're gonna want to give yourself projections. Okay? I think if I exit the replay, they'll show up. Yeah. No, they didn't. All right, whatever. So we focused a lot on bear flags, but it's the same thing, vice versa for bull flags. Measure your X, measure your Y, give yourself that projection. If there are any questions, more than happy to answer them right now while we're on the stream. If not, I definitely have to take a piss. So I'm gonna give it, let's see, I'm gonna put a 30-second timer on here. If there's no questions in 30 seconds, then I'm gonna call this wrap. Ooh, that was 30 minutes. If there's no questions in 30 seconds, then I'm going to call this stream a wrap so I can go pee. Any other questions? You got 30 seconds to answer them. Guys, I appreciate you. If you made it this far into the stream, if you were here from the start, shout out to you. Even if you're not a supporter, I'll give you that fist bump there. Boom. Fist bump for making it this far. Even if you're not a supporter, I really appreciate it because, this shit takes time, takes energy. And if you're sitting here watching it, learning, then I imagine you're serious about trading. So good for you, and thank you. I appreciate your attention. There's our timer. That was 30 seconds. So I'm assuming I explained very well and that no one has questions because my explanation was so fantastic. Thank you very much, guys, for allowing me to take time out of your Friday. I hope you guys kill it this weekend. I hope you're making a lot of profits. Remember, guys, what you want to do, learn to find your strategies, reasons for entry and exit, manage your risk, and learn who you are emotionally. Analyze yourself. I know we don't like to be self-critical. It can be hard sometimes, but it's very important to know who you are emotionally. And again, on the structures, when you're identifying the market structures, make sure that you long from the bottom, short from the top. If it's a bullish variant, you want to try and long from the bottom more often. If it's a bearish variant, you want to try and short from the top more often. So we're going to continue this series in a few weeks. 2 weeks from now, we're going to talk about how to be financially free. I know I do a lot of crypto shit on this channel, and we are going to talk about a little bit of crypto in that session, but we're going to talk about the shit that people skip over most often, like budgeting, saving, okay? We're going to talk about some real serious shit that a lot of people aren't doing or talking about. So I'll make sure you come into that stream and the future streams where we go over the other patterns, tell you how to measure those, how to take your entries and exits. And one more time, thank you everyone for coming out. I'll see you fellas at the next one. And I'm going to sit here and smile and